Hello, everyone, and thank you for joining us today. My name is Dallas Kriebel. I'm Communication Specialist here at Farm Credit East. And before we get started, I'd just like to offer a few technology tips to keep in mind while you're viewing today's webinar. All attendees are muted throughout the presentation. Once in a while, it's a good idea to tap your mouse so that your screen doesn't go to sleep during the presentation. There will be a time for questions and answers at the end. Questions can be text chatted in at any point during the presentation. And to send in your question, just click on the little question mark button on the right side of your screen to expand the question box where you can type in your question. And also a recording of today's webinar as well as the presentation materials will be available at farmcrediteast.com as well as on our YouTube channel for access after the webinar. And now I'm going to turn it over to Joe and we can get this thing started.
Okay, great. Thank you very much. Good afternoon and welcome. My name is Joe Baldwin. I'm the Director of Financial Services Training at Farm Credit East. And with me today is Diane Fish. She is a tax specialist, excuse me, that also has a lot of experience with 1099 processing and even coordinating 1099s at Farm Credit East. So I figured between the two of us, we'll be able to provide some good information, hopefully. The idea is to kind of have a refresher to some requirements if you already are aware of it, but also to point out some changes and some frequent mistakes that we encounter. Because remember, at Farm Credit East, we provide financial services of all sorts, and one of those is issuing 1099s for customers. So we get a lot of questions, we see a lot of issues, and so we thought we'd have a webinar to try to share some of this information to help you. If you want to continue issuing them yourselves, that's great. Just want to equip you with some of the rules, and even if you're working with us, we hope this session will help you as well. So I'm going to dive right in here. To start, I will share just a slide or two on something we send out to our customers that we do 1099s for. It's a letter, it's a pamphlet requesting information, but it also has, you know, I think it's maybe biased. I think it's kind of nice. It's got information on some rules for 1099s, importance of filing them and the penalties, etc. And then we provide sort of a sheet that someone can fill it out with the information so that we can process the 1099s if we're going to do it. So I just want to share that we have this. You may have already received this if you're working with us. If not, and you would like, if this will be helpful, you know, text chat it in and we'll make sure we get you a copy of this. I'm going to start with some general 1099 requirements. So what is a 1099? What's the purpose? Well, it's an information return, which means the IRS wants us as business owners, as farm owners, etc., farmers, they want us to issue these if we make certain payments so that the IRS will have information saying, hey, that person should report this on an income tax return. So it's called like an informational return. Copy goes to the IRS, copy goes to the recipient. So when they do their taxes, they know, oh, here's how much I was paid, etc. So with 1099s, I tried to simplify it as much as possible and fit it into four requirements kind of have to kick in. You have to say yes to all four of these. And if the answer is yes, then you should be issuing a 1099. And we're gonna do some examples. We got, you know, the Q&A. If anything pops up, Diane can help me if I'm running astray. Thank you, Diane. But number one, when you're saying, do I even need to issue these, or to whom do I have to issue these, etc. First things first is this only applies to a payment your business is making for a business deduction, tax deduction. So what do I mean by that? I mean, well, first of all, if it's personal, even if it's for a service and over 600, and we'll talk all about this, no 1099s are needed, right? So I'm a homeowner, pretend I spend $900, someone comes and I don't know, fixes something on my house. It's not a business deduction, it's my personal house, so I don't need to issue a 1099. Where this can, you know, maybe something new to those on the call, since it's a business deduction, a trade or business operated in for a profit. This does mean, though, if you are a rental, even if you have a Schedule E where you would report like residential rental income. So pretend I have a house on Main Street that I'm renting out, right? Totally separate from my farm business. Because that rent, right, that's a business, that's a tax deduction. I might have to issue 1099s if I have someone come in and do work, plumbing, repairs, custom work, whatever on the house. So step one is basically if it's your farm, if it's a business, or if it's rental, you may be required to issue these 1099s. However, if it's strictly personal, no need to issue it. Okay, number two, second one. The recipient is not a corporation. Remember, these four things are what will require a 1099 to be issued. So now let's go back and just pretend, all right, I'm a farm. I spend $1,000 for a service done on my farm. Well, we know that's a business deduction, okay. Number two, now I look to see the person I'm paying. It's kind of a weird little rule, but they say if they're structured as a corporation, they do not need to be issued a 1099. I have some slides in a bit about LLCs, what type of corp, so I'll get into that. But just generally speaking, even if it's a business deduction, it's over the money, the $600, corps do not require it generally. I have an asterisk on a slide shortly. Watch out for things like attorneys and vets. We'll come back to attorneys and vets. But generally, if it's not a corp, okay, they will require a 1099. Third one, the threshold is a $600 amount. So I pay $500 for someone to come out and do work. You know, they help me harvest. I give them $500. That's not over the $600 threshold, so I would not have to issue them a 1099. This is kind of an aggregate throughout the rule. So this doesn't mean, oh, every check is under 600, you're okay. If I gave someone, you know, $500 to harvest one field and a week later I gave them $500 to harvest another field or something, that adds up to 1,000. It would exceed 600. So therefore that person would require a 1099 as long as all four of these are met. And the fourth is the payment is of a certain type. Generally, we're talking about services, but we got some nuanced rent, interest, and real estate purchases. Talk about that in detail here, okay? Generally, we're talking about services because what this is doing, the whole 1099, if we take a step back, is it's kind of like we have payroll often and we have employees, they get paychecks, and at the end of the year, we give them a W-2, right? Just like me, have farm credit, I get a W-2 at the end of the year saying how much they've paid me so I can do my taxes and farm credit can do theirs, okay? For these independent contractors, these custom hires, these one-off projects, you know, harvesting, we'll get into some examples. They may not be set up on our payroll. They're not a regular employee, and we'll talk later when it kicks into being an employee versus an independent contractor. But assuming they don't meet that employee threshold, we may pay them for some kind of service, and the IRS wants a 1099 since we're not going to be giving them a W-2. Okay, so we'll get into details, but big picture, right? I'm just laying the foundation. We're talking about non-personal expenses. If it's not a corp, so any other entity, LLC, individual, trust, right? They do require a 1099 sent to them. It's the payment over $600, or I should say the aggregate, adding up all payments to them throughout the year. And lastly, it's for a service is the big one, but things like rent, interest, and real estate purchases also require 1099s. So let's go back to the S Corp one, right? I said, if you're not an S Corp or a C Corp, okay, you need a 1099 if you meet all those other requirements. So here's a list of the most common, you know, tax entity structures. Right, we all, as a farm or a business, maybe we're operating as an individual, which is sometimes called a sole proprietor or a doing business as. Maybe we set ourselves up as an LLC, etc., right? What this slide is doing is it's showing you the recipient, the person you're making the payment to, or the entity you're making the payment to. If they are any of these in red, they will need a 1099 as long as the other $600, etc., have been met. So when I said corporations, there are actually two types of corporations, an S corporation and a C corp. That's not important to you to know which they are. All you need to know is if they are a corporation, they do not need a 1099. However, the asterisk says, unless they are attorneys or vets. So that means if you're paying for vet services on your farm or attorney legal services on your farm, then even if they're an S corp, this rule doesn't apply and they still need a 1099 issued to them. Okay, cooperatives are kind of a sub account of corporations. So for example, farm credit, we get this question a lot. Hey, if I'm paying you to do taxes, do I need to issue to farm credit a 1099? No, you don't. If there's milk cooperatives, etc., right? Nothing like that. No cooperatives or corporations need the 1099. Okay, so here's common examples of what we see on our farms when we're working with them, or questions that trickle in to say, hey, do I need a 1099 for this person or this situation? So helpful little screenshot here, hopefully, where you'll notice on the right, I guess if we start on the right, we're gonna see a couple different colors and a couple different 1099s. Of course, it'd be too easy, right? If they just gave us one 1099, that'd be nice, but they don't. There's lots of different ones and we gotta know which 1099 to put it on. So first and foremost, I'm gonna start with this W-2 because, right, this is like a whole different ball game. If you have employees, you're paying them paychecks, you're withholding taxes, you're issuing them a W-2 at the end of the year, that's totally separate than this 1099 stuff. Next, I'll jump to the kind of the classic, what we think of when we're issuing a 1099 is someone like this independent contractor, or maybe custom hire, machine hire in our chart of accounts, whatever it is. Someone where we're paying for them to come do something for us, but they're not an employee. They're going to need a 1099 NEC, which is non-employee compensation. So you'll see a lot of green 1099 NECs. That's the most common. And some of our farm examples include things like breeding, like custom work, harvesting, legal fees, planting, spraying, trucking, hauling, etc. I mean, these are all services that are not employees, and assuming it's over 600 and assuming it's not a corp, we're gonna send them a 1099 NEC telling them, here's how much we paid you, send a copy to the IRS so the IRS knows, and we'll expect them to report that as taxable income when they file their tax return. So those are the green ones, those are the common ones. Let's jump to the blue, light blue. There's a 1099 miscellaneous, okay? So on this one, we've got something a little different, rent. This is not really a service, but if in our trader business, we have a rent expense, they want us to issue a 1099 to that landlord, that landowner, that building owner, etc., and report the amount paid for rent on a 1099 miscellaneous. So if you think about it, a common structure for today's farms sometimes is one LLC for the farm or the operations, and one LLC for land holding, for real estate, etc., right? That can be a common strategy for a lot of reasons. Even if you're kind of paying yourself rent, so to speak, the IRS wants you to issue yourself a 1099 for that rent paid. So this is only trader business stuff, okay? But assuming you're deducting that rent expense, even if it's to yourself, they're going to want a 1099 to be issued to yourself. Isn't that nice of them? Isn't that nice? Okay, vets is the other 1099 miscellaneous. Anytime you read about rules with 1099s and health workers, healthcare, etc., vets actually fit in that definition of health workers. So watch out if you're not issuing one for vets. They want you to, and they want it on a 1099 miscellaneous. Okay. Now let's jump to the orange. These are, again, we're getting weirder and weirder away from services. 1099S now has to do with real estate. So they want, if you are the purchaser of real estate, they want you to issue, or if you're working with an attorney at a closing, a lot of times the attorney is doing this with you or for you. So maybe just ask about it, right? If you're buying land, buying buildings, buying real estate, they want a 1099-S issued. And if there's timber, watch out, there could be 1099-S requirements as well. Timber, kind of like land, same rules fitting in to the 1099-S. So now I'm going to jump to the last section, interest on savings and banks, interest on mortgages. This can get a little tricky, right? We may be used to this one or both of them. Maybe we have money in a checking account or savings at a local bank, and every year they send us one. First of all, you may say, well, some years I get it, some years I don't. It's taxable income either way, the interest, but they only issue it if it's over $10. So sometimes if you say, geez, I only earned $6 in interest from the bank, maybe they don't issue one. Okay. But what's interesting is they want 1099 INTs, even if you're not a bank. Okay, if there's interest paid on almost anything that's not a mortgage, anything that's not a mortgage. So what does that mean? Again, pretend I have multiple businesses or something and I'm lending money back and forth, or right, there can be a lot of ways that interest is being calculated. Maybe I'm supposed to be issuing a 1099 int, even if it's to myself. Okay, maybe maybe I'm an S corporation and I'm borrowing money from myself as an individual. Maybe I'm supposed to be issuing a 1099 INT to myself. This 1098 is very interesting, and thank goodness it didn't end with a 9, it ends with an 8, so it sticks right out as a sore thumb. It's got a unique little twist here. It has to do with interest. It's interest on mortgages, but unlike all the others, where the payer, the person writing the check, the person making the payment, needs to issue the 1099, in this case, the recipient issues the 1098. And again, if you compare it to a local bank, that kind of makes sense, right? I have a mortgage with a local bank. I send them a check each month, or it's done electronically. So I'm kind of paying them. They are the recipient of my interest. So at the end of the year, as the recipient, they send me a 1098 saying, thank you, Joe. Here's the amount of interest you paid throughout the year. So I can determine if it's a deduction on my return, etc. So watch out for that. Again, I'm trying to give examples where we find issues or we find questions. Like, you know, a lot of times I see the payer issue the 1098 when the recipient's supposed to, and vice versa. But hopefully you found this little summarized cheat sheet here helpful, because it's the most common we seem to see with our farms and our farm related businesses. And I tried to highlight some of the nuances with real estate purchases, rent, and interest. Okay, so we got the foundation. That's perfect. I think we're getting good already. We understand kind of who needs one, what type of 1099 to issue for what type of service or expense. I want to point out an e-filing requirement because this is something relatively new. Maybe you have issued 1099s in the past by hand, right? You print out a blank one online. I think like Staples used to have blank ones. I don't know if they still do. You do it by hand and say, I just need to issue 2 or 3. I'm going to do it by pencil. That's fine. You can still do that. But what's happened is, starting with tax year 2023, if you have 10 or more informational returns, you must file them electronically. Now, informational returns can be W-2s, can be 1099s. It's all of those. So watch out. If you've got 10 or more of these, you now have to do them electronically and they can't be done by hand. If this is right from the IRS website, I've got a number of slides right from that website because it's actually a pretty helpful resource, especially with some of this 1099 questioning. To e-file, you've got to now apply for a transmitter control code. Sounds fancy. A TCC. You need a TCC, but check this out. It may take up to 45 days to process. So just a heads up, right? Maybe you're doing this through your software already and everything is fine. If not, if you're just was hoping to do it by hand and you have 12 this year, you're not using software, whatever the case may be, you may want to get started. Go to the IRS website, Google, right, TCC application for 1099s, because if it takes 45 days to process, you want to get started now so that you have time to issue these in time for the due dates at the end of January. Some other dates we'll talk about in a little bit. Okay. Just want to point this out. They call it IRIS. If you hear someone talking about IRIS, it's informational return system, something or other. So that's where they want you to use IRS website, and you have to apply. Takes 45 days. Has to be done electronically as long as there's 10 or more. Okay, so why do we really care about these? We don't want to get hit with a penalty, right? Sure, we want to be good and follow the rules and make sure we're helping the recipient out by knowing how much to report on their taxes. But we also want to avoid any penalties at all costs, right? So what are these filing dates and what are the penalties if we miss them? Well, there's a few different dates, of course. It'd be nice if there was just one, but there's a few different dates. I would say just focus on this first date and everything will be fine, right? If you get everything done by January 31st, IRS will be happy. The recipient will be happy because they can do their taxes on time, right? And your accountant will be happy, whoever's doing your taxes. So they make it a little complicated where, for example, 1099 miscellaneous, which was one of those rents or vets, they say, okay, you have to issue it to the recipient by the end of January, but we're going to give you till the end of March to e-file it. Same kind of thing with some of these 1099s and interests, right? But to me, I don't know. I don't see any benefit of, like, if you're already getting the work done and sending it to the recipient, I'm not sure why waiting and not e-filing it right away would even help, okay? So my advice is just pretend everything is due January 31st, because remember, besides requirements with the IRS, someone needs this information to do their own tax work. So if you're dragging your feet and, oh, I got till March, April, whatever, I'll get it done whenever. Well, imagine if they already filed their return on January 29th or something. They think they're all well and good. They get a 1099 sent to them in March, and now they got to amend their return because it was a different dollar amount, etc. So aim for January 31st, and all parties will be happy you did. Okay, what happens if you don't meet these deadlines? Well, you'll notice the penalty amount has to do with how quickly you correct the mistake if you correct it. So the first three, they all get increasingly higher. They all get higher here, each 1099, depending on how fast you fix your mistake. So you make a mistake, you correct it within 30 days. Okay, the penalty is going to be $60 per 1099. Not too bad. Still kind of steep. You corrected it just in a few weeks. Now let's say you wait till August 1st, right? It's longer than 30 days and you correct it in July. Now we're talking 130 per 1099. Even if you still correct it, but it's like 7 months late or something, they could assess a penalty of $330 per 1099. And here's the one where they say, boy, you just chose not to. You purposely did not issue this, okay? Maybe your contractor said, hey, you're not gonna send me a 1099, right? Wink, wink, I'll do this for cheaper. And IRS could then come in and say, wow, we're gonna hit you with a $660 penalty for each of these 1099s that we think that was the case. So interesting they're out there. They get they get bigger, larger by the longer you wait to correct it. And it's sort of maxed at 660. If you say, you know what, it's just not worth it, I'm not going to do it, or whatever reason, if you're intentionally disregarding it, they could hit you with a $660 penalty per 1099 that should have been issued. So what do we need? How do we, right? This is the year end. It's December 17th, which is great. Kudos to all of you for being on a 1099 webinar when most people are really worried about 1099s in January. So you're a month ahead. What I would do with this extra time, right, is make sure you have everything that shows up on a W-9 for anyone you think you should be issuing a 1099 for. The W-9 is really, if you're doing everything by the book, you want to get a gold star for issuing 1099s. The IRS says before you even pay people, if they're going to do a job for you, they want you to hand them the W-9 or email or whatever and say, okay, you're going to come build a barn for me. Thank you. Fill out this W-9 and I'm happy to work with you, right? Because the IRS wants that so that you as the payer will now have things like their name. You'll now have their entity structure. You'll have tax ID numbers as well as socials. So again, we do 1099s, we work with farms, we understand. The reality is not every person is filling out a W-9 for every custom hire worker, okay? It's available, and what does happen a lot of times is when it comes January, it comes 1099 time, farmer says, right, oh, I guess I don't have their tax ID number. You know, what do I do? That's when they often take this W-9 and send it to them, or we suggest, say, all right, here's what you do. Send them this W-9, say, fill this out, right? And hopefully they get back to you with the number, right? They're kind of volunteering, saying, yeah, here, tax me, I'll fill this out for you. But that's what's supposed to happen, and that's why the IRS says do this up front, so that you don't have to chase them down after the year. Maybe they did a project for you last February. It's now 12 months later. You can't even get a hold of them. So helpful if you can do this up front. If not, this at least tells you the information that you will need to issue the 1099s. Now here's a little like pro tip in terms of mistakes. Nowadays, there's a lot of what we call single member LLCs. That's also known as like a disregarded entity. So a single member LLC means me, pretend Joe Baldwin. I've been a contractor for years, pretend I've been doing work on your farm as Joe Baldwin and I have a social. That part's easy, right? You would send a 1099 to Joe Baldwin with his social security number. But now let's say, you know, I set up an LLC and it's still just me. That's a single member LLC. Maybe I call that Baldwin Custom Work LLC, and it's still just me. This is where we see a lot of errors and it spits back with rejections or something. What happens if I set up an LLC, a single member LLC, I now have a tax ID number or this EIN down here, employer identification number. So whether I'm an LLC with 8 partners or an LLC with myself, anytime I'm something other than a sole proprietor or a doing business as, I'm going to have an employer identification number. So why am I harping on this? What's the error? Well, the error is a lot of times you as the farmer may know, say, oh yeah, Joe always done work for us, or I'm going to send him a 1099 to Joe Baldwin or something. The issue is you need to be consistent in terms of if I'm sending it to Joe Baldwin, the individual, I should be issuing it to Joe Baldwin Social Security. However, if I know this is Baldwin Custom Work LLC, I need to send it to the employee identification number. So the mistake that we often see is maybe they put Baldwin Farms LLC or Baldwin Custom Work LLC as the, you know, who I'm sending the 1099 to, but they put it to the Social Security number. So it spits back, the IRS says, well, wait a minute, this doesn't match. Like, what's going on? You got to fix this. Or vice versa. Maybe they issue the 1099 to Joe Baldwin and they put the employer ID number instead of the social. So watch out for that. Make sure if you know they're an LLC or, you know, even have the conversation, maybe even send them this W-9 to fill out. but we see a lot of mistakes where they issue it to the name, but the business ID, or the business name and the social security. Try to be consistent with those. If you have both, you should be issuing it to the business name and the employer identification number. So let me say that again, right? Pretend I fill this out. I give you my name, Joe Baldwin. I give you my social, but I also give you business name and an employee ID number. If I give you both, always go with the employee ID number, okay? And match to the business name. Another common question we get a lot. What about parts and supplies and materials, right? People, I think, understand if I go to the store and I buy $1,000 of parts, I do not need to send them a 1099 because that's not a service. And you're correct. But what happens a lot of times is, geesh, yeah, I work with someone or a business and there's some labor, there's some parts as part of it, right? Do I issue the 1099 just for the labor? Do I issue it just for the parts, for the two together? Let's go right to the horse's mouth. The instructions from the IRS says when there's payments for services, including payment for parts or materials used to perform the services, if supplying the parts or materials was incidental to providing the service. Let me say that again. This is in the instructions basically saying, what do I include in the amount paid to this contractor? Just the labor or just the parts or both? Well, it depends. That's a classic tax answer. General rule is just do the labor. Okay, general rule is just do the service. This is saying, look, they also want you to include parts and supplies, but only if these parts and supplies were incidental to providing the service. Right? So pretend I pay someone $700 and they also had like $30 of just miscellaneous stuff they needed to perform that service. I should issue them a 1099 for the entire $730. But now let's pretend I bought a $500 part from someone and they charged me $200 of labor to install it. Even though that adds up to $700, I actually am not even required to issue them a 1099 because the service component of that was only $200 and the parts were a substantial component to that transaction. So do you get what I'm saying here? When there's labor and parts, generally, if you're really buying parts and they're helping install something, you would only include the service component on your 1099. However, if it's all rolled together or you know that the parts supplies were incidental, then you can combine both. Okay, so wouldn't lose sleep over if you've been doing it one way or the other. In theory, it's all taxable income to the recipient anyways, but if you want to be by the book, it's just services. However, it's services and parts, but only if the parts are an incidental component to the overall transaction with this individual. Okay. This section, if you're using software, and I'm going to share a couple screenshots from QuickBooks to show you how you can set up some reports and set it up to track it so that in theory, okay, in theory, I'm careful with my words here. At the end of the year, you can click a button, print a report, and you know exactly who needs a 1099. The disclaimer is, this is really helpful and really cool, but it's like a moving target. Unfortunately, a lot of times we find your software, whether it's QuickBooks or another accounting software you're using, if you do some setup to get your 1099 processing easier, that's great. But if you then go and add new accounts or new vendors throughout the year, you may have to go manually add them and check them, and I'll show you what I'm getting at. But see, I'm trying to set the stage of this is very helpful, and on day one, you can have a perfectly clean 1099 report. However, if you think 3 years from now, you just click that same report and it's accurate, chances are over those last 3 years in your software, you've added some new accounts, you've added some new vendors. So just watch out and be mindful of that. I'm going to show you 3 steps and then the report that you would want to run in QuickBooks if this is what you're using. And the same logic applies to a lot of other accounting software we've seen. First thing in QuickBooks is you actually have to go in and you sort of have to just big picture tell it, yes, I'm going to be tracking 1099s. I want to issue 1099s. So in QuickBooks, you're going to go to the Edit section, Edit Preferences. Over on the left, if you scroll down, there's a section Tax 1099. So you'll see, first I think the My Preferences section shows up. You want to switch to the Company Preferences. And if you haven't done this already, it'll default probably to be saying no. So step one is we're going to say, yes, I'm going to file 1099 forms. Okay. Again, if we're in QuickBooks, you go to Edit, you go to Preferences, Tax 1099, Company Preferences, and change this, do you file 1099 forms, to be yes. Okay, step two. So we've told the software, hey, I'm ready to do this. Yes, I'm going to be issuing 1099, start tracking it, QuickBooks. So now step two is you have to go into the various vendors. You have to go into the vendors and you have to tell the software, yes, I want this person to be eligible for a 1099. So up at the top, we're going to go to the vendor section. And first you'll see a long list of all the people you've written checks to or paid bills, etc. If you click on, you find one and say, oh, this training example, right? Maybe you only have one each year. And you say, I always have to issue a 1099 to John Smith. Okay? You go find John Smith, the vendor, and check this box that says vendor eligible for 1099. So maybe after this call, if you're really, excited, you got the momentum for 1099s, you go to your software and do these two steps. You say, okay, QuickBooks, I'm going to start tracking it and make my life easier. Now let's go to the vendors and say, who do I usually issue them to? Probably have a long list of vendors, and maybe that cheat sheet from earlier will help to say, all right, let's think about vets. Let's think about attorneys. Let's think about harvesting help. Let's think of custom work, independent contractors, right? Then you may find more than you probably thought. If you were issuing 6 1099s before, maybe you do that exercise and the IRS says you should be issuing 11, who knows, right? So step 3, after we flagged each vendor that you want a 1099 to be issued to. Step 3 is then to go back into our edit section. We go to our preferences in the 1099 again, right? So we've already checked this box to say yes. Now, when we check this as yes, you're going to see something pop up that says, if you want to map your accounts. If you want to map your accounts for a 1099 NEC, you can do it here. Click here. If you want to map accounts for 1099 miscellaneous, you can do it here. So then what happens, you click on one, say, yes, I'm ready. This map account section shows up, and it first may not show any accounts because it may say right here, just show 1099 accounts. So if you're doing this and you don't see anything listed, come over here, drop this little caret down and select show all accounts. Now what'll happen is by default, each will say omit these payments from 1099. That's the default. So I buy supplies. This is just made up chart of accounts. I buy supplies. I want that omitted. That means even if I write this check to that John Smith, who I know does services for me, if, however, I code it to supplies, the software is smart enough to know we're not going to include that in your 1099. We're only going to include the custom work. However, now I go to repairs and maintenance, custom hire, any other accounts that I want to be eligible for 1099 services, and I tell it, sure, we want this to go on the 1099 NEC for non-employee contribution. So again, I think this is a really good exercise, especially for December 17th. Okay, I'm telling you, you do this now over the next week or two, your January will be a lot easier when it comes time to issuing 1099s, or even if you're working with us, giving us the list of who needs it. You do all this now, that's wonderful. The disclaimer, remember, is because there's some check boxes and some flagging, this is almost like an annual thing you would have to do, like cleanup, right? You spend a few hours doing it on year one or whatever it takes. Then you might want to do this every December 17th going forward. Say, okay, did I add any new vendors that might be eligible? Let me make sure they're checked. Did I add any new accounts, right? Maybe I added a new repairs account called parts. I would have to then go back in here and map it saying, yes, link it to the 1099 NEC. Okay, so that's your homework. Optional, of course. But if you use QuickBooks or even another software like Redwing, Centerpoint, same concept applies. You kind of have to flag some vendors and accounts. Once you do, it's kind of on autopilot, but just watch out for maybe an annual cleanup in case you add new accounts or new vendors. Once you've done that, now it's January 1st, or maybe heck, even now, if you're done writing checks, you know, in terms of services and 1099s, you then will go into QuickBooks in the report section. You go to the vendors and payables section of reports, and you'll see a few 1099 options for reports. Summary and detail, it's the same information, it's just summary, right? As you can imagine, says John Smith, $1,800, Smith Trucking, $1,400, whereas the 1099 detail is nice because it'll show me every transaction that fits into that 1,400. So I recommend going through the detail and just saying, oh, does this look right? Does this look right? Great way to kind of audit yourself, so to speak, before sending the 1099s to make sure it's the right amount. Okay. Let's say you don't want to do all this, or you don't trust the software with the check boxes. The quick and dirty way from your software, I'm big into the Pareto principle, 80%, right? 80-20 rule, so to speak. 80% are probably going to fit into some kind of repairs or some kind of custom work. I don't know how you've called it, what you've named it on your chart of accounts, but pretend you have a relatively straightforward chart of accounts, you have a custom hire expense, and you have a repairs expense. The 80-20 rule says, hey, if you didn't have any legal fees and you don't have any animals to pay a vet, click on those two and sort by vendor. That's important, right? In QuickBooks, wonderful software, you can drill down, see details. If I filter, let's say, an income statement for 12 months in 2024, I double click on custom hire, it'll show me all the transactions within that service custom hire account. Be sure up at the top though, to make your life easier, you can total by and you can sort by. I recommend doing both. Total by and sort by vendor, right? Think of your repairs, it may be a 6-page report with just January 2nd, here's what I did, January 6th, right? Don't print that and get a highlighter out one by one. That's a lot of work. Instead, if you're clicking on the repair expense or custom hire in your software, filter it, sort it by vendor and total by vendor. Then you'll nicely be able to see, oh, John Smith, I paid him $1,400. I didn't even have to do all this fancy software setup. So those are two approaches that hopefully will help make your life a little easier. Going through mapping the accounts, having the software work for you. If that doesn't work for whatever reason, do the 80-20 and say, hey, at the end of the year, let me double click on the two most 1099able, right? Pretend that's a word, the two most 1099able accounts, repairs and custom work, or whatever you call it, sort by vendor, total by vendor, boom, makes your life a lot easier. Okay, so I think this is one of my last sections before I open it up to questions here, where timing's working well. I do just want to spend a little time on W-2 versus 1099. Okay, hopefully you're now feeling a little more confident. When do I need to issue a 1099? Who gets one? How do I have the software help me out? I do want to take a step back and say, watch out, because they may not be on our payroll and we may not be paying them a paycheck. So therefore we say, yes, we should issue them a 1099. The IRS may say differently, and they've audited this and challenged this to say, we really think John Smith, in my example, we really think he should be an employee, Joe, and you should be giving him paychecks and W-2s. And why do they want that? Right? Few reasons. One is withholdings. They want, right? If John Smith is reclassified as an employee, I am now responsible to withhold taxes, right? We FICA, Medicare, all sorts of stuff. Second thing it does is, in theory, helps John Smith in that now he would be subject to the minimum wage requirements, disability requirements, coverage, so different credits and benefits. So there's a few reasons. The IRS sometimes says, we're going to audit you and we're going to reclassify some payments you've been making to say they really should be employees. You should be withholding payroll taxes. They're subject to minimum wage reporting, et cetera, payments. So let's talk about what the IRS looks at to determine if your payments should really be to an employee rather than what you're considering an independent contractor. So once again, plug to the irs.gov website. They do a nice job articulating what they are looking at. And they boil it down to 3 components, but it all has to do with a degree of control and independence. So remember, what is this listing? This is saying, pretend, let's use an example. Pretend every year I pay John Smith to come harvest my cranberries. Okay, pretend that's all he does. It takes him a few weeks and he comes out and he harvests all my cranberries. I've been paying him a 1099 in the past. I want to look at this to say, shoot, is the IRS going to try to make him an employee for me instead of an independent contractor? And what they look at is, well, does John Smith have control behaviorally, financially, or let's look at the type of relationship. So behavior is kind of who's calling the shots as to what this person is doing, when they are doing it, what tools they are using, how they are doing it, when it starts, when it stops, okay? The more control that can be said to, from the independent contractor, the more likely they will continue to be classified as a 1099. However, if the IRS says, Joe, as an employer, you're telling him what to do, when to do it, using your tools, etc., we may think he should be an employee. Okay, let's use another example, like a barn. Maybe if I say, hey, you're a barn builder, can you come out and build a barn for me? I'll pay you 200 grand, whatever. Well, am I telling him you need to show up from 8 to 5 every day? I'm going to train you on how to build a barn. I'm going to give you the tools. I'm going to, you see what I'm getting at? Even if it might be seen as a one-off project and he's only there for a couple months or something, couple weeks, whatever. Depending on these behavioral and financial control issues, the IRS could try to make him a W-2 employee instead of a 1099. So financial, what's that? Are the business aspects of the worker's job controlled by the payer? So again, how is this person paid, right? Let's use that barn example. Hey, come out, build a barn. I'm gonna give you X dollars an hour. I'm gonna pay you for 8 to 5 work. I need you for 60 days. How's that sound? Well, guess what? IRS would probably say that's an employee. I determine when his hours are, how I'm going to pay him based on an hourly rate, right? On the other side, if I say I need this barn built, I'd love it done by the end of whatever, but they come and go whenever. They use their own excavators. They use their own stuff. Instead, the pricing, this is where financial is interesting. They say, Joe, I'm going to charge you a flat 200 grand, no matter how long it takes me, right? That is likely more of a contractor type role, getting a 1099, as compared to the earlier example when I said, I'm going to pay you X dollars an hour, and I only need you for exactly 8 to 5, etc. So just a few more examples here, again, of what they look at with behavior. What are the type of instructions given? What kind of training? It really comes down to control. And I think in general, we are pretty good at understanding they're doing a job I asked them to do. It's done how they want it. They're using their tools, etc. They've got financial control. meaning they have a significant investment in their own tools, in their own excavators, whatever, to build this barn. Here's a good one. Services available to the market. If I have those harvesters, if someone's coming in and harvesting, if they're only doing it for me and my farm, guess what? The IRS might say, Joe, that's an employee. But if I say, oh, well, no, yeah, sure, they're with me for 3 weeks, then they go to the neighbor's farm for a week, then, oh, right, so they're doing the service for others. That, again, is implying financial control to the independent contractor, and we're likely fine keeping them as a 1099 and not as an employee. And finally, the third is the type of relationship. So, under audit, they'd look at contracts, written agreements to say, well, sure, he built a barn or she harvested your cranberries. What was the agreement? How were they to be paid? Who was determining the rules, the tools, etc.? So pretty helpful. Again, don't want the IRS to reclassify a payment from a 1099 to a W-2 employee, because guess what? They'll hit you with penalties on unpaid tax withholdings throughout the year. So with that, right where I wanted it, with 10 minutes left, open to questions. Diane, hopefully you are able to keep an eye on the text chat that have come in, and I don't know if you want to unmute yourself or if you have anything to address that I've missed. But what do you think, Dallas? Are you seeing anything trickling in?
We actually do not have any questions as of now.
Wow.
We'll give it a minute, see if anyone has any. But if not, then we can give everyone a few minutes back, and this recording will be posted to farmcrediteast.com/webinars tomorrow. So if anything needs to be referenced, you can go back and reference that recording.
Great. Thank you. While they're thinking, Diane, anything I missed or from your experience with 1099s, anything to layer in, or are we okay?
Oh, can't hear you, Diane.
Oh, can't hear you, Diane. Sorry. I'll take that as everything is a-okay.
Okay, so we did just get one question come in. What if a vendor has a title of LLC, but I Google it and says they are a corporation?
Okay, that's an interesting one, and I'll let Diane layer in on this too. So first of all, in a perfect world, we would send them the W-9 to know for sure. That way we can document. If we're ever hit with a penalty or something, we can say, hey, this is the W-9 that was filled out. Second thing I'd say is just be careful of, the internet, depending on what site you're using. If it's like a state site or there's other informational reporting, that's not entirely accurate. Third, I would just say, hey, maybe reach out and give them a call or ask them and say, hey, are you a corp, right? Or are you an LLC? So either a W-9 or a simple phone call. Hopefully you can address that rather than just taking a guess or an assumption. But Diane, anything to layer in on that one? If we can hear you.
No?
No? Okay.
Yeah, we're good? Okay. I would definitely go with the W-9. So there is a box on the W-9 that says that there might be a LLC, but they are taxed as something else. So use that, and I think you'll be safer than relying on Google. I've been there before. I look for Google too, because it is helpful, especially when you don't know.
Good question. Thank you. Any others out there?
Not seeing any at the moment. Give it just one.
There
Go
was
ahead,
one
Diane.
thought that I had was that sometimes you'll get somebody that will not give you information. Do your best to document when you ask. I don't know if you mail them a W-9 and you document when you mailed it to them. Do your best to get as much information on that as you can.
Good point. Thank you, Diane. Well, good. I appreciate everyone's time. Hopefully you took something away for 1099s, and can use the software to make the process a little easier, or you now feel more confident as to who should be receiving them and by when. Appreciate your time. Dallas, I'm good if you're good, and we'll post this recording so others can watch it as well.
Yep. Thanks everyone for joining. Thanks to Joe and Diane for their insights. And be sure to check our website, farmcrediteast.com/webinars for this recording. Should be up tomorrow. All right. Thank you, everybody.
Thanks,
Have a
guys.
great day.
See you.